Shit. Okay. Good morning. Good morning. Good morning. Good morning. All right. So we're starting out in a bit. Let's just give a minute or two for other people to join in. If you're joining us, you're welcome. You're welcome. You're welcome. You're welcome. You're welcome. So how is it going? How has your week started out? Good, bad, average, or you are still in there, no trades yet? Wagwan. Let me know in the comment section. Come on. How has your week started? Have you made any money from yesterday? Between yesterday and today, have you made any money? If you're my student, you're supposed to have made something at least. At least. So that means we're starting out the week pretty good. Usually, you guys know I don't trade on Mondays, right? But I always say this, I don't trade on Mondays, but when a good setup presents itself, I still take advantage. That's why we're logical. We don't necessarily have to say, oh, when you see a very fine and sweet setup and you're like, it's Monday, I'm not taking it. No, if the setup aligns, I'm taking it. It's just that I don't pressure myself into saying, yeah, I want to start trading or anything because some Mondays are just so crazy, yeah. So I just avoid it. But I mean, if a good setup presents itself, why not? We should. All right. So without wasting much of our time, we're going to proceed for what we have today. If you're coming in for the first time, this is what we usually do every Tuesday. We go on live markets like this, to analyze and prepare ourselves more for the week. Yeah. And we analyze setup. I show you guys what I'm looking at. And I also take setups from you guys and also analyze it so you can see if it aligns with what you're also looking at, just as extra confirmation. With that being said, let's get to it. So you guys know that this period, in fact, throughout this year, I've been dealing on hard currency. When I mean hard currency, I'm talking about gold. I'm talking about, we're just introducing silver now. So as you guys can remember, last week I did a lot of silver trading and maybe some little bit of GBP. So I'm reducing the currency market for now. I'm focusing on more of the metals because I mean the moves are crazy, when you get a good move, it just moves. With currency, sometimes, to get a 1:3, 1:4 can be crazy unless you're trading on a very small time frame, like all this 5 minutes, 1 minute. That's when you be getting those kind of risk to reward ratio. If you want to get 1:3 with my kind of setups, I'll have to wait for a full day or 2 days before it even hits CP, and that can be really draining sometimes. Anyways, we're gonna start with gold as usual. I have something on gold. I've posted it already. I'm just gonna explain it. Yesterday, we already started selling gold, so I'm gonna share my screen now, and we're gonna start our analysis from gold. Yeah, the father of them all. All right, so let me share my screen quickly. Okay. All right, so this is what we have on gold. Um, Let me share this instead. The one with forex.com. Okay, so this right here is the one with forex.com. Yeah, better. And now, if you are analyzing gold or any pair, rather, any pair, right? You know, usually the market opens with gaps, right? It opens with gaps. So I usually use both, maybe Oanda broker and also use forex.com. I use them hand in hand, right? Now, if you look at this for Oanda, or FXTM or the rest of it, you will see this gap, right? You will see the presence of this gap. And if you check forex.com, you will not see the gap. Now, most times, even if the gap does not exist on forex.com, does not mean that the gap is not there. It actually is there, right? And you can always trade that gap and fill it and all the rest of that. However, I also use forex.com even to just show me a, a different kind of price, proper price action where I can, get clearer entry and exit points when I'm actually trying to analyze that pair. So yesterday I sent out a signal to my VIP group, yeah, showing them like a sell setup, which was this one right here. So the market opened with a gap, as you can see. That is one of the reasons why this period I don't like holding trades over the weekend, is because of things like this kind of gaps. They can be very crazy, and depending on the kind of broker you're using, some broker can mess you up with this kind of gap, right? So the market opened with this gap, and I mean, it is quite obvious from the structure of the market here that you can tell that this gap must be filled. I mean, this is not the kind of gap that the market will just neglect and move along, because with the structure you are seeing, the market has to fill this gap. Now, if you come to forex.com, this is what you're going to see on forex.com. That gap you saw was a massive impulsive move, right? This is the massive impulse. Please, I hope you guys are following. Can you guys see my screen? Please let me know in the comment if you can see my screen, please. If you're following up and you're seeing my screen. Can you guys hear me and can you guys see my screen? Please let me know in the comment section. Okay. All right. Thank you for that. All right, let's get back to it now. Um, So on forex.com now, you can see that this is a nice impulsive move, right? We actually took this. This was the other trade. Okay, I think I had another setup here. I don't know, maybe I deleted it. Then you can see this nice impulsive move breaking the structure here, telling us that, I mean, this is a nice push to the upside. So definitely after an impulsive move comes a correction. But on other brokers, you're not going to see this as an impulsive move. You're just going to see it. So that is why I use both of them, right? To just give me a clearer perspective. Now, after the whole impulsive move, the market started ranging around this area. Then obviously we're going to expect that sell to happen, right? And after the sell, we'll now continue in our proper direction. So let's go back to this was what I used. So my first initial entry was a sell, and this sell was basically to what? Help fill this gap, to fill this gap. So we got in, and I did not expect the push to happen at around that 12, 11, 12 or so, because I mean, that is the London New York intersection, right? So that is not a proper time to be entering trade. And that time can be a very manipulative time, especially 12 o'clock, 1 o'clock. That is the the New York pre-open. Time frame, you might think that time frame does not matter or session does not matter. Session actually matters in your analysis. You must always understand that there are certain moves that happen more during a certain session. If you're trading a pair like XAU USD, you must understand the volatility period gold can be volatile at any period, but it is more volatile during the New York pre-open and the main New York session, and also during the Asian session. Sometimes in the London session, we may not get much of a move like that on gold. Rather, New York session is a lot more powerful. Go and backtest it. You see that every New York session from 1 o'clock, 1:30, that is when the pre-open start coming in, right? The market will be going in the opposite direction. From 2, 2:33, that is when the actual direction of the New York session, that is Nigerian time if you're in Nigeria here. Yeah. Anyway, so we got in on this sell. I got a nice move. I closed out, secured my profit immediately because I saw that this move was gonna, go back because this was the move right here. It was not time for it. And then at night, I think around I did something very crazy. I entered a trade here at around 7, 8 o'clock yesterday, and I put my stop loss above, and I'm like, I know that this sell is gonna happen. Put my stop loss way above, give it some good room to breathe, and then put my TP somewhere way below around here. And guess what? I just 5 minutes later, I just closed the trade. I was like, nah, I'm not doing this overnight trading. I just closed it. This morning, woke up, bam, all the sale happened. Well, that one has passed. So what's next now going forward? Where are we at? Now, this is the new area of interest we'll be looking at. You see this zone I drew right here. Now, if we're going to get a proper directional bias for the next move that is about to happen, we are going to be using forex.com. And this is it right here. So very clear, you can see we have a proper break of structure here from the last move that happened, a proper break of structure. Now this becomes my trading range, and I have this low and I have this high right here. This is another structure, internal break right here, and that is what the market is actually reacting to. And if you go to, I think, is it 15-minute time frame also? Yeah, it's the breaker block. That is a very, very clean, sweet breaker block the market is reacting to. Now, I'm not taking this breaker block entry because, the imbalance here is still very clear. So this breaker block can give you a push. It can go all the way even as high as getting to this point. I don't care about that. Currently, I'm not using this breaker block entry. I'm going to be waiting for this deep retracement order block entry, simply because we still have the presence of a nice looking fair value gap there, and this order block is unmitigated, and this is the last point of support. So judging from this whole thing, this is the right and actual place we're going to be waiting for this market to come to. So I have a pending order set here already, and my stop loss is just below this particular low right here. If you want to be more conservative, you can drag your stop loss all the way down here. That is you being extremely cautious. Or if you want to be a bit aggressive, you can even shift your stop loss directly below this 15-minute order block, right? And if you come to the 1 hour time frame, it also signifies something. Now the 1 hour time frame is going to give you an entry from this point right here, making your entry a little bit bigger, right? Now, it is also acceptable because 1 hour order block is very, very powerful when it comes to trading gold. 1 hour order block, I can tell you for a fact, is very powerful. Now, there's a breaker block also existing here on the 1 hour. All of this right now, I'm not going to put them into cognizance because I'm just going to wait for the deepest part of this retracement. If we can have a massive sell like this, this pair has every right now to push all the way down into this deep part. So I would prefer to get it there rather than trying to jump in on a fast pace here. And guess what? This is just London session, right? So usually we may not see this move happening now. This move may happen during the New York session, and I will prefer it that way. I'll prefer to see this move happen during the New York session. So all the while the London session is in progress, the London intersession is in progress, we will be seeing more of the choppy market slowly coming down, going forth and coming back. Then what I would want to see is that during the New York, maybe from 1 o'clock, if it gets there, but if it doesn't, we can get activated anytime. But I would prefer to see the activation during the New York session so that the New York session can be the one that will push this price all the way up here, right? I would prefer it happen that time. It's just give me more confirmation for this price. But if it comes down and activates us now, no problem. We're still going to hold out to it. However, We can see that the price is still dropping and coming back to that area of interest, and then we'll see how that actually goes. So you can mark this out on your own chart and follow up, right? We're using this 30-minute order block. On 15 minutes is the same thing. You're going to still see it there, just like this on the 15 minutes. And on the 30 minutes is still very much the same thing. So we're having an AMD happening right here. Market is cleaning out this liquidity and dropping back into the structure. At this point, you could actually want to sell down here, but to me, it's of no use, right? I will just simply wait for the buy setup to actually materialize before we jump in. All right. So that is that on XAU USD. And if you drop to the 4 hour time frame, this is what you're going to see. So let me hide up all this so you can be clear. So on the 4 hour time frame, what are you seeing here? This is another 4 hour order block. You can see the clear break of structure, and this just tells you that we are still very much in line with the trend, and this is going to be a catalyst for the next big push into a much bullish area. So yeah, everything aligns. We just have to put our stop loss, put our entry, and then wait for market to give us the reaction. All right, okay. So that's pretty much what I have for gold. That's what I have for gold. So we're gonna go the next one, silver. As you can see now, I'm beginning to fall in love with silver, and silver is doing some good jobs too, just the way gold is doing now. Okay, so this is what's happening. Earlier this morning when I was looking at this chart, this second touch had not happened yet. It did not happen yet. So I okay, let's go back to the higher time frame. Let's do a top-down analysis on it, right? So let's start from the 4 hour H4. Oh, let's start from the daily. If you start this from the daily, you can see how the daily bias is, right? We're pretty much creating highs and lows. Highs, so this is the latest break of structure, and this is where the market is currently reacting to, right? So we have had a proper mitigation, a deep retracement and a mitigation, and market is pulling up. So definitely we're going to be having, even if this is an impulsive move to the downside or it's a correction, at least let us see a 50% retracement. So that means we still have opportunity to push all the way up to 50% of this level, right, on the daily. So if we come to the 4 hour time frame, if we were getting a 50% retracement of this whole or this entire push to the downside, I mean, 50% should be somewhere around here. I'm trying to just use a psychological number. So 50% should be somewhere around here, right? So we're going to be reacting to this area of interest that the market neglected. So that means we still have opportunities to push all the way up. And that is exactly what you're seeing happening, right? So you're seeing a series of higher highs and higher lows, higher highs and higher lows, proper point of support. And this is the 4 hour time frame, which we're not going to take a trade on the 4 hour, right? So we're going to drop down to a smaller time frame. I just want to show you the bigger picture. You can see the break of structures clearly. You can see the dimension. Everything is so clear. This is a very simple analysis. And then let's drop down to the H2 on the 2 hour time frame. Now this is where it gets interesting, right? So like I said, when I was doing this analysis at first, this market had already touched this order block, and I was like, okay, I know that with the way gold is pushing to push down a little bit, right? So we can expect a second touch, thinking that maybe before, this class was going to wind up, we're going to expect that second touch. But even before the class came on, the second touch had happened already. So here's the deal here. This second touch has happened, and you can see the market is creating something that looks like a falling wedge. And what is the constants behind a falling wedge? When you see this after an impulsive move and the market start producing a falling wedge, this is a chart pattern that's like this. It obviously, okay, so and that is exactly what we're seeing here. So this just gives us what extra confirmation that the market is going to buy. And in conflict to what is happening with gold, we're expecting a buy as well. And these guys move together. They move very similar, rather. So now the second touch has happened. The best I can do for myself now is to wait for an even deeper retracement. And so where would that deep retracement be? The market has already done the first partial mitigation. So this is what we're going to be having next. This last point of support, this last trench of order block that this market did not touch. So this is going to be the next point. We'll say, okay, hey, market could definitely come inside here and give us something for the push, right? And here you can see we have a little bit of order block, right? So it just simply aligns to what we're watching on gold and with the price action that we're seeing here. So definitely, I will be waiting for silver to drop in to this zone. I'll put my stop loss just below right here to make it easy. And then we are going to drive this all the way up to at least this point, because definitely we're taking out this one. This is another TP point, this is another TP point, and this is the next high. But I mean, if you get a good 1:2, 1:3, you can exit the trade pretty much. So yeah, this is what I'm going to be waiting for silver as well. For silver as well. Okay. All right. So who is having very similar bias to silver or an opposite bias on gold and silver? These two we have treated so far. Now we're in the business of the waiting. All right. So also we're going to look at BTC. We're going to look at BTC, BTC, BTC. So let's get to BTC. All right. So this is BTC. How many of you guys remember this setup? We treated this in a live session just like this. How many of you remember this setup? This particular one, it was on a 2-hour time frame where I had this liquidity point drawn like this, right? We had this order block. Look at it right here. This unmitigated order block. I don't know if you can remember, but this was a setup we actually analyzed during our live session, and this is what we have now. But funny enough, I actually deleted my order some time back. I deleted my order after I got in on this one, and I deleted this order. But look at what happened. It finally came, tapped in, and gave this whole bunch of profit and peeps rather. So now let's just go back to the daily time frame and see what is actually happening. So you could see here that from the daily time frame, we're in like a serious correction phase. Let me explain why I call this a correction phase. You have to go back to a higher time frame like the weekly time frame. That's when you understand what I mean by a correction phase. Now on a weekly time frame, look at what this chart is actually doing. We are having a series of massive impulsive move, correction, massive impulsive move, a correction, right? And in this correction, this market is creating a series of highs and lows, highs and lows. Now, there's something interesting happening here because on this break that happened here, we have an AMD simulation here, right? Accumulation, manipulation, and distribution. And when accumulation and manipulation has occurred, the distribution will only happen when there is a mitigation between these two. So this is where we have the manipulation, right? So we need to see price come back to mitigate this point here for the distribution angle here. So this is like a destination to where BTC is headed, right? So that's the weekly time frame. So for BTC to get here on a lower time frame, we're going to be seeing series of higher highs and higher lows and higher highs and higher lows all the way till we get to this point. So now me saying that currently we're in a correction here is because if you look at this structure now, right? From the weekly, you could tell that, okay, this market just gave an impulsive move and broke out from this zone. So at least we want to see market come to this resistance turn support or even a deep retracement back to this order block level before we see a push to the upside, right? So that is, and you can see there's a sweep here, market is dropping. So this is more like a correction coming into this structure for the next impulsive move. But because this is a weekly time frame, on a lower time frame, you're going to see it as a massive downtrend. That is just top-down analysis, right? Basis. So let's go down to the daily time frame. Now, on the daily time frame, this is the last major high that was created. This one right here. Let me excuse me. This was the last major high that was created, and this market is dropping all the way back down here, right? So now you can see here that we're creating series of lower lows and lower highs. Market has done something here. Here we have a higher high and we have a higher low. We have a higher high here, and we have a sweep of this low and a mitigation of a particular order block in this zone. But if you look closely here, we have another unmitigated order block here, which actually is in line with the resistance turn support of the weekly time frame. So let me draw this out like this, and then let's go back to the weekly time frame and check something. Do you see what I'm saying? So yes, you see this zone now. So that means this zone is like a destination for this sell to come into before we start thinking of a massive buy to the upside. So if I have this as a destination, I'm just going to be looking at the price action that will take us all the way down to this zone. Because on our daily time frame, sorry, on our daily time frame, you can see this order block here right inside that zone, and this order block is unmitigated. So we have something here, right? We have a clear destination. Now, also for us to get to this destination, we have another order block right here on this daily time frame that has not been mitigated. So as price is pushing up now, this order block that is pushing up to can be the next move that will push price down. It's just simply understanding market structure. I don't even know if I'm making sense. Are you guys following up at all? Because I feel like I'm just speaking to myself. Are you guys following up at all? Yeah, this is some deep explanation. Okay. All right. So now we are waiting for this to happen. We want to see price push all the way up to this zone, then we have a sell again. So let's drop down to the lower time frame now and see how we're going to follow this up. Right. So the reason why I had this, okay, let me delete this so we can have a clear look. The reason why I have this right here is because this is a destination of where we can start seeing a proper sale happening. So that means we're going to be buying all the way to this zone. And you guys know how BTC somehow moves in line with gold as well. So now we're looking for how to join buys that will take us to this zone right here. What I just explained earlier was simply the top-down analysis of where we're going to, where we are, and all of that shit, right? So now, what is the next move here? So this is what we're seeing here. Very simply put, we have a breaker block here, a breaker block. Now, the reason why I'm going to be using this breaker block is because this breaker block has an inducement to it, right? You see how this market came this close and did not entangle with our breaker block, came back for the second time again, forming another low right here. Did not make contact with our breaker block. So yeah, if you come to the 2-hour time frame, the breaker block have a small order block area around this area. So this just makes it even more powerful. So I'll be expecting, if this order block does not hold price and push it all the way up, I'll be expecting this market to drop down to mitigate this order block, something like this, drop down to this point, and we get a buy continuation from here. So this is my practical buy zone. So I'm just going to mark this as a buy zone. As a buy zone. So I'm put this like this. Yeah. So definitely I'll be waiting for market to drop down into this zone, then to get in on my buys, right? But this buy is going to be having so much impulsive correction, but all the way to this area right here, this next zone, so which is going to be like a sell zone, right? So that's on BTC. So now these are the three major pairs that I'm looking at. Gold, I showed you guys what we're looking at on gold, which is this right here. Let me bring up gold. We're waiting on gold right here. Let's drop down to the 1-hour time frame. Yeah, we're waiting on gold right here. Yep. And the next one is silver. We're waiting on silver right here. Pairs I'm looking at for this week. I'll be following gold on back to back to back to back normally, but this is my next move on gold. So now, if you have any pair you're into for you, now is the time you bring it out. I'm not doing much of currencies this because I'm not really seeing much like that to even work with. So I think these three are very much okay for me to pull up with for the week. So if you have any pair you want me to look out for, you can just say it out in the comment section and then we'll just check it out before we end our class today. How many of you have similar bias with what I have on these particular pairs? Does anybody have any similar bias for gold, silver, and BTC? All right, somebody's pulling up on AED JPY. Oh, okay, AED JPY. Let's check it out. Let's check it out. Let's check it out. AUD JPY. Where are you? Okay, here it is. All right, so let's go to the daily time frame and see. Okay, let me see the weekly time frame. Right, right. Okay, so let me delete all this and start all over. Okay, so this is what we're seeing on the weekly time frame. Very bullish bias. And then it's currently ranging here, and the daily time frame confirms that range based on the market has been in one particular sideways movement. You guys know what happens in ranging markets, right? Most times before the breakout happens, order blocks, support resistance is highly respected until it is not. So down to the 4 hours, like I said, order blocks are usually respected. So we have this now. Okay, let me mark this order block first. This is one. Then we have something above it as well. This particular pair is not really known for, sweeping liquidity before it moves just like that, but it still does that. So let's just be careful. Okay, so we have this zone. So yeah, this zone is respected. We have something a little bit inside. So let me go back to 1 hour and still see. Okay, on 1 hour, I'll push this a little bit further. Yeah, and we have this other zone right here. Okay, so now it's beginning to make more sense. All right, so from here we can see the clear structure, right? We can see how the market has been giving us those highs and lows, and currently it's reacting to this particular area here. This is where the market is, right? So it has been reacting to this point. So that means it has been engineering liquidity around this area, right? And above the liquidity, we have this order block zone. Then we have another tight order block zone way above. Now, what I usually do is I will check the pip count from this point. If we take from this point right here and put our order block, this is about 17 pips if you're using this zone. And if you're using both zones together, that's about 46 pips or so. And if your risk to reward does not tally, then it does not make sense. So here's the dilemma here. We have this order block area and we have this inner one again. So which one are we going to use? That's where the problem comes. Do you use this one and put your stop loss tight, or do you use the one above? You might not get mitigated and the market might just leave you. Let me go back to the 4-hour time frame. The 4-hour time frame have a clear order block, which is this first one we're seeing here, which is this first one. And very much as I would like to use this second one, I feel this first one have more advantage. We just need to be careful in looking at it properly. It has more advantage. Why I said more advantage? Because It has proper engineered liquidity around it. It has this second one as liquidity. So what I'm going to do is rather shift my entry a bit deeper. Now, look at this. This is an inner order block right here on the 1 hour time frame. So if I am doing this, I'll prefer to take my entry from this guy and then I'll have to be very conservative. And then if I'm using this order block for the sell, if I put my stop loss here, this is 40 pips. If I put my stop loss above this, I'm getting an 11 pip stop loss or so. Yeah, 11 pip stop loss. And then this would be a massive risk to reward. Massive risk to reward. Then if you want to be conservative, super conservative, you wait for this entry. But this, if this will give you a good risk to reward as well. But the likelihood of this one playing out is less than this other one. So you're gonna have to choose. I will leave you to your own personal decision. Personally, what I'm going to do is this is AED JPY. Personally, what I'm going to do is I'm going to take this first entry. Has a tight risk to reward. If it hits me, I will take the second entry, but I will definitely take this first entry for myself. That is what I would do. Because sometimes I like to be aggressive. I like to be aggressive sometimes. So yeah, entry. So that's it on AED JPY. It's pretty much ranging on the higher time frame. So we're going to be expecting price to react to all these areas before a breakout will happen. That's pretty much it. Yep. Okay. Oh my God. Oh my God. My screen has not been showing. Are you kidding me? Okay. Okay. Hold on. Hold on. Hold on. I did not know that. All right. Can you see my screen now? Can you see my screen now? Please do check. Okay. So I'm on BTC, right? So let me switch to AED JPY. Can you see my screen now? Just a moment. Okay. So can you see my screen now? I'm on AUD JPY. Please let me know. But the chat is not changing. So why is that? I think this should be a network problem. Okay, check now, please. I'm still on AUD JPY. No, 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 no. I'm not on silver. I'm on AUD JPY. That means my network is lagging or what? If everybody cannot see, that means it's from my network. The Wi-Fi is still on. It's moving nicely here. So what could be the problem? Whoa. All right. So what's gonna happen is that I will just drop the analysis of AED JPY on the Telegram group. I'll just drop the analysis. Okay, okay, let me try that. Let me try that. Let me open a new tab. Let me try something else. AED JPY. Okay. let's try this. All right, so let's see now. Can we see it? Is it still showing silver? Okay, good. Good, 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 good. All right, thank you. Okay, so let me just run through this explanation again. Let me run through this explanation again. So what I was explaining earlier here from AED you can see the pair is naturally bullish. It has just been freakishly bullish. And however, right now we're in a space where the market started ranging. Okay, so if you drop down to the daily time frame, you can see the range properly, right? So it's moving within this sideways market. It's moving sideways. And structurally, we can just follow up on the range. Whether it's going up, you go up with it. It's going down, you go down with it. It's that simple until the range actually breaks out. So right now it's pushing up, but we have a resistant level that the market will definitely react to because of the range, right, that we're seeing. So now on the 4 hour time frame, we start getting a clearer picture and a clearer structure of what the market is doing. So here now you can see that we have one order block here, a sell order block, and we have another inner order block here. So the dilemma I was trying to explain was the particular order block to you. So let me break it down some more because definitely we're going to have some sells, right? So if we drop down to the 2 hour time frame, 2 hour time frame, you can see this market is respecting this resistant area. That's more like the liquidity point that is engineering, right? And above that is this particular order block we have. This was a 4 hour order block, but if you break it down, we have a smaller order block here. So yeah, this is what the market is actually reacting. No, it's going to head to rather. And then if you look above again, there is another order block. This order block is there. It did not quite sweep any liquidity. It's just forming, look at it well, it's just forming its own, just a standing order block there. No kind of liquidity formed. So this is the reason why I said, for me, I'm going to be using this particular order block as my entry point. Why? Because of the presence of this liquidity right here. So I'm going to be using this one. And this one will give you a good risk reward. I mean, this is like 11 pip stop loss and a 90 pip TP, right? Because that's like a 1:7. And then here we have a 16 pip SL with a 1:6 risk to reward. So if at all this first one did fail, no problem, you can use the second one, but it's most likely that we might get a tap in on this one. So here's the deal. Most times when you get a tap in on this one, there will be a reaction, right? So what I usually do is in this kind of situation, I break even really fast because the market will react to this order block and then push down. But if this order block is going to fail because this entry now, if this market comes exactly at this point, this entry can form another liquidity, engineer another liquidity for this guy right here. So if I enter here and this market push out a little bit, I'm breaking even almost immediately because if it comes back up, it can come and sweep it and then come for this mitigation. So either way, you're not making any losses. So you're trying to take your position from both sides, but you're being extra careful. It's just trying to play smart with the whole thing, right? So I can take an entry here as the market activates and move away from my entry. I'm breaking even. This is like the fast kind of break even. Then if it goes, no problem. I'm going to be in profit crazily. But if it comes back for this one, I'm definitely not going to lose any money, right? I'm just going to take me out on break even, or if at all I'm, scaling it down and what's that word again? Trailing it, that's fine. I can still close out on some profit. Then if it comes back for this one, that's fine because this is exactly what could happen. This market can come right here, activate this guy, and goes down like this, right? Now it has engineered liquidity. This is a high and this is another high for this guy right here. So that is why I said you break even fast, just in case it comes down and does something funny like this for this particular guy, then you are still very much aligned and intact. So either way, we're getting entries from this particular area. So that's what I explained on AUD AED JPY. Yeah, 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 yeah. So we're gonna take one more pair before we end the class. One more pair. If you have any pair you want me to look at, just one more before we end the session. Um, USD CHF. It's not the same person that gave us USD CHF. That still give us Euro AED. Okay, it's a different person that gave us AED. So we have USD card, Euro USD, GBP, JPY, GJ, GJ, GJ. Okay, so GJ, let's look at let's do it like this. We'll do GJ USD CHF quickly. GJ gave me he sell I think on Friday. Was it on Friday or so? Yeah. No, I think it was yesterday. This actually hit SL. So let's check GJ quickly for currencies. Yeah, this was where it hit SL GJ. Crazy one. So let's look at the current price action for GJ. Look at the daily time frame. Okay, so for this pair, it's pretty simple, right? This is where we are headed now. From the daily time frame, this is where we are heading to. This place for proper distribution, right? AMD concept for proper distribution. So this is where we're heading to our destination. And so my bias initially was to sell down to this order block for a buy continuation, but this failed, right? So since this failed, let me remove this so that it doesn't distract us. So since this failed, now what is the next move? You come down to the 4 hour time frame. So we're going to have this an order block. Yeah. So a breaker block slash an order block. So this is going to be like the re-entry to continue going bullish right now. Yeah, we have this breaker block. Now, market has already broken this structure right here. So this is going to be the next phase we're waiting for. Break this down to the 2 hour time frame. Now, the 2 hour time frame, it gets more interesting. Right, this is how it gets interesting. So this one will now serve as liquidity inducement, right? Order block inducement and 1 hour time frame clear. So this is how we're going to now break this down. So for a deep retracement, we're going to be looking at this zone right here for a deeper retracement. Then on 30-minute time frame, it still very much aligns deep. So I hope this deep retracement aligns with the 50% move of that order block from the 2 hour time frame. 50%, but a lot deeper. Yeah, a lot deeper. So this is the cue for GBP JPY. A break of structure happened there. A break of structure happened here. So we have fair value gap here, imbalance. This is our major support area. And this is what we're going to be waiting for. A buy from this area. To be more conservative, a buy from this area. Yeah. So that's GJ. We still have some time, so let's look at USD card, USD JPY. Those pair really I have not seen. Let's just look at it. The price action on those pair have just been very annoying. I was looking at them this morning, and let's look at USD card. Okay, let's look at USD card. Higher time frame, daily time frame. Where okay, oh wow, we've entered this order block. Oh. Okay, so the market has been buying since. all the way to this zone here. And now this is where the market is. So you're expecting a sell to happen. Okay, I'm seeing a zone here that will get a mitigation factor. And then on the bigger scale, I have this order block point here. So let's drop it down to our time frame. Yep. So to our time frame, this is the most recent order block that has serious liquidity around it. Serious liquidity around it. And 1 hour, yep, serious liquidity around it, even with the 1 hour time frame. Now, this one is not a mitigation. It could be called a partial mitigation, but even when it comes to partial, the market did not actually touch it. If you open it, well, there's still a less expansion here. So this is a very valid area of interest. But remember, these are going to be short movements because the market is about to change trend. So this is a short movement. So I get a quick in, quick out in this kind of moves. 1:3, I'm out because at this point, what we're going to be experiencing is you remember on the day on the 4 hour daily time frame, the market has been very bullish. So we need a very good retracement to happen. And we're just reacting to this order block. So the reason why this is going to be a quick in and out for that is because we're going to be expecting a shift, a market structure shift, which has not happened yet, but we're going to be expecting a shift, right? So if this should give you a quick in, the moment the shift happens, all this order block that were unmitigated, all of them will become liquidity. Price will start coming for the major ones, like this ones here that it left behind, way, way, way behind. That's when we now have that proper shift. But this is the quickest trade that you can get on this pair for today. The quickest trade, and it's going to be an in and out. It's not something you want to hold for too long. Yeah. So that's it on USD. Then okay, let's check USD CHF before this my man that is crying here will swear for me. Let's check USD CHF quickly. Okay, USD CHF, USD CHF. All right, so USD CHF. Let me start from the daily. This guy has been buying, right? I'll be selling, so this guy should be buying. So okay, weekly. We're on a buy frenzy. Okay, so from the weekly time frame. Oh wow. Oh wow, wow, wow. Okay, so we have this market pulling up. They did not enter this order block. We had this massive push. This is a weekly time frame, and then you have this order block here, and this market has mitigated this order block. So it's bound for a what? A push to the upside. So that is what the weekly is telling me. This market is upbound, moving to the upside. And we have had a reaction here already. So this is the next destination because this one has been mitigated, right? So this is our next destination. Okay, so now I have this on the daily. Let me break it down. So let me drop down to the 4 hour time frame. Okay, now this is now dicey here. 4 hour time frame is looking dicey. We've had this proper mitigation. So this is a zone right here. And the bigger picture is this particular zone that has not gotten mitigated. So are we falling down for it? Most probably. So let me check the dollar index first of all, so to help me get a clearer view of USD CHF because the dollar index does the same, has the same bias with USD CHF. So the dollar index is massively bullish as well. It's reacting to this breakout block here. So we'll be expecting more sales. So after this market fill up this gap, we'll be expecting more sales on the dollar index. So if we're expecting more sales on the dollar index, that means we'll be expecting sales on USD CHF as well. USD CHF. We'll be expecting sales on USD CHF as well. So right now, where's our best bet for the next push to the downside? Because at least we need to even at all to come and mitigate this point, or even the sell might even go deeper. So we expect a sell. Now, where do we get our sell from? Where is the next zone that market will definitely will react to? Now, we have had a mitigation from here. We have a zone here, and we have the nearest zone, which is this one that got partially mitigated. So this is our nearest zone. So on the 1 hour, this is still the most closest zone we have on the 1 hour. However, we have this deeper area here on the 45 minutes. Nope. And on the 30 minutes, yeah, it's just the same place. It's just the same place. So this is going to be the zone I'll be waiting for that sell from here. This zone, shorten it from here. My SL just above. Very similar to what we did on that other pair. Right, very similar. We could have this, and then we have another sell zone from here. Very similar. But this one right here, right now, this is our best bet for USDHF, because we may not see price moving all the way up there now because of what we saw on the dollar index as well. Dollar index about to start dropping, but we might have a push up to this zone. So let me even just remove this one and just leave this as a sell zone for now. So this is going to be USDCHF. Yeah, pretty much it. All right. I think that's about what we can take for today. So is USDCHF a demonic pair? Maybe it has done you bad, but probably giving some people money. All right. So me, I'm going to be waiting for my setups, like I just showed you guys earlier. Okay, let's show gold here. This is gold. USD. As you can see, we're getting close. We're getting real close. So yeah, XAUSD, this I'm waiting for. Silver, right here, baby. This for, and BTC as well. We're waiting for down here. Right. So these are the three major pairs that I'm waiting for. Once you just set your pending orders, or you just simply watch the chart as it comes there. Like I said, we'll get more action during the New York session, and then we'll see how the week goes. So along the line, as the chart keep expanding, I'll keep dropping some signals for you guys. Not everything, maybe one or two or three signals on especially gold, because I'll be trading gold very, very actively this week, like I've been doing actually. All right. Thank you guys for your time. I hope you learned something. I hope you got some value from this. If you did, please leave a like. Don't just come get something and go. Hit that like button so that at least we'll get more reach when we're doing our next class. All right. Thank you so much. See you guys on the next one. Bye.